Hello, today is that of the third day of March 2020. My name is Derek and this is the Money Charts channel. Like we're always, all bets, trades, and other like. Well, that's within each's own risk and their own reward. Let's take a look at some markets, cryptocurrencies, and just see what we can do. Really the two indicators that I like are Fibonacci and that of, this 18 average. Why? Well, that is the 25th letter in the alphabet. Well, that doesn't make sense why I just finish a topic and then just say a letter. I mean, I could have said M and the 13th letter in the alphabet, but anyway, let's take a look at ETH Bear. Sorry if that's stupid, whatever joke, but let's take a look at this. This thing is breaking out right now from this level. I've already drawn in this little line in here because when I want to take a look at this is on a shorter term time frame. But this is the inverted fund to Ethereum, which after the Ethereum rally from March the 1st in here, well, it's looking like it's going to pull back. So maybe this looks like on a day trade possibility. This could come up to maybe at least find up a move to this 1870 level. That's a gain of 150, and you're looking at about 8 or so percent from a target level. And the reason why I draw things on here for the Fibonacci, and if you're looking for Fib, what I would not do is calculate Fibonacci from this low and this high. Rather, I would take the Ethereum Fibonacci from that same range, and then you pretty much get the same number, so I guess it doesn't matter too much. But yeah, I guess 61.8% of a move, whatever the key levels when you calculate it. Things like that are pretty fun to do, I guess, I suppose. So here we are. This is the 1 hour front weighted average of highest prices, which was resisted here last night at 20 hours or 8:36 p.m. Eastern time. And then it breaks out above it, but that doesn't work. It's really a failed breakout. However, what a concise move, but this is well overextended. Big move up, correction, big move up, and we'll see how big it is and how the correction is going to, because this big move up could just keep on going to that target level, and it is as it is. But Theta has got some interesting looks, and I think that one is possibly poised to break out today. Let's take a look at that one, but obviously Ethereum is going down. We'll do that next, I suppose. Which it's down to 224. We see this on the 4-minute time frame, and now on the daily, there's a little bit of a rally, and we've had several days, of course, just flipping up in here. If this thing breaks down, well, this is where 61.8% Fibonacci from this low to this high would come into play. Most likely, this has been a key level, but I'm not going to calculate it. It's 287 divided by 116. And that gives you a number of somewhere near 2.5 or so, I would suppose, to the exponents of 0.236, 0.382, 0.618, 0.764. That's how I like to do it. I've already drew the ones in for Theta, and they have been working out relatively interesting in here. Now, on the daily chart, we've had this rally that broke out of this multiple range of resistance from 1336 up to 1395. And it did so on February the 13th. And what a phenomenal move it was, or just barely phenomenal, because its next target level would have been 1552, and it just surged past that level, but only for a short period of time, and to the level of about near 1800. Consecutive red candles down, 3 of them would follow, thus finding only short intraday support, as we can see on Valentine's Day or the 14th. It congested, but was unable to reach the 1182 mark and congested it at 1386. It did most certainly resist this 1528 mark, but what I really like about what I'm seeing in here is how after these 2 red candles down, continuing within, of course, this congestion, I would suppose, how we look to see how this thing is looking to be breaking out. Even if you look at just the 2 candles and further, the current one and the previous one, we can see within the last one that we had a high of 1484 and a close of 1438. So just by looking at this without reducing the time frame, we know at minimum it had an intraday correction from the intraday high of that of 46 or so points, so 14, 28, 42, a little, at least a minimum 3%. And then if we just go ahead, take a look at this on the hourly, well, that's what the correction was yesterday. It came up to 1483, and wow, did it ever wonderfully find support at around the low 1400s, between 1413, but more importantly, near like 1421. That was just magnificent how I was able to do it. 1, 2, 3, 4, 5, 6, like 7, 8 consecutive weeks. And we can see how 2 weeks showing strength at the 18 highs after all of this support for, again, like 7 or 8, 6, 7, 8 periods. And then after those 2 periods, you had the attempt on exitation, and then follow through with intra-hour correction, follow through, and we're correcting this particular hour, 17 minutes to go, and it's doing so above the 18 average of highs. It's doing so barely coming back to this level of support resistance. Coming back more so would be about 1450 or so, and that would coincide with the 18 average. When I see a move like this, the must hold area is always like 61.8% from key low, 1412, to key high, currently in at 1504-ish. And then also just the obvious point, oh, where was resistance? Yeah, resistance was like 1435 to like 1445. So that's like the must hold area on any deep pullback if it's going to occur such a situational move. As I look at this though, when I see a spot where it's able to, let me just, this is, would this be 23.6? I'm supposing the Fibonacci is from here to here. Anyway, just the fact of the matter of the 18 average, that's what's important. Whenever I have it come up to this high, we can see all of the support is this resistance in here from the end of December and all of January, February. So it supported that, which is what it needs to do. How does it react to its move? And it reacted in that fashion or manner. And then because it rallies up here, holds, when I see a rally, the hold like this for several periods, and it breaks the 18 like this, well, this is almost a good situational spot where it's going to break this resistance, most likely at least come up and test this high. And in a situation where it tests this high, this has been a very long sideways consolidation like this. We can see how this support represented this resistance. This support is representing this resistance. So you're getting that uptrend type of situations. We're creating the higher highs, and that's what the next one would be. So getting past this previous level of resistance, and I didn't mean to draw a line there. I'm just trying to move the screen back like this and looking for those levels when we can see 2169 up to 25 is this little range-ish or so area, 23, 24. And as that stands now, 2400, well, if it has a decent sized break above that, that's like 700 basis points. That's like 40, 50%. And 2400 on now, that's a good 70% move. If, of course, it's able to do it. But it looks like the prospects of this is looking very good. We had all the support on the 18 lows. It is leaving it. Today's lows, of course, coming in near the highs and at that of 1410, and the 18 average of lows is in at 1328. So it's leaving that point. It last touched it on the 28th. We can see how it rallied from there. This correctionary move came very close to it March the 1st, but again, just a very beautiful rally as we can see from these March 1st lows, and I like how it's breaking this resistance to me. I think this has got a lot of potential. Of course, everything you do is your own risk, your own reward. For myself, risk-reward management is always job number one.